Let me ask you something. What if you could get $100,000 in funding for your business at 0% interest without touching your savings, giving up equity, or risking your personal credit? Sounds too good to be true? Well, today's guest is living proof it is not too good to be true. My guest, Patrick Pychynski, is the founder of Stacking Capital, and he's helped over 300 business owners secure more than $17 million in zero interest business credit. He's not pitching quick loans or shady funding schemes. He's not using real banking relationships and real strategy. In fact, that's what he is using is real banking relationships. Now, he's a Marine Corps discipline meets financial chess. In this episode, we break down, first of all, how he gets entrepreneurs funded in under 14 days. Secondly, what banks aren't telling you about 0% money. Thirdly, Patrick's going to share why most business owners are sitting on capital and don't even know it. So if you're looking to scale your business and you're tired of being told no by banks, you're going to want to listen into every second of this episode. Welcome to the Raising Private Money Show, the only podcast for real estate investors who want to fund their deals without relying on banks or credit or using their own cash. I'm Jay Conner, the Private Money Authority, and I'll show you how to get private lenders begging to fund your next deal, because every good deal starts with the money. You're going to meet my guest, Patrick Pychynski, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Patrick, welcome to the show.
Jay, thank you so much for having me on and for that epic intro.
Absolutely. Well, Patrick, let's dive in. Let's start with the big one. How in the world are you helping people get $100K to $500,000 in zero interest business credit? That sounds insane.
Yes. And Jay, before I start, I know your podcast is literally all about getting the path to unlimited funding. So I just want to say, if anybody's gotten value out of the show, just be sure to like and follow if you haven't already. But yeah, now I'm ready to get started. So how would you like me to start, Jay?
Well, yeah, let's get you to answer the big question. And that is, how in the world are you helping people get $100,000 to $500,000 in zero interest business credit?
Great question. So a lot of people don't know that they might be sitting on anywhere between 50 to 150, sometimes even more, $1,000 of 0% interest credit by just solely leveraging their good credit score. So typically what we're looking for to get the conversation started, at least, is a 700 plus credit score. How much it unlocks will depend on the actual credit report itself. But the benefit of this is that you're not tying up the home, as the first choice, which is what we usually don't recommend. It's unsecured capital. It does not report to your personal credit. And typically you're only paying about 1% of the balance to service that debt during the 0% intro period, which can range anywhere between 9 to 18 months for an average of 12 months. But if done right, this process can be repeated and also at some point restructured into a longer, better term sort of loan or line of credit down the road if done right. And that's what I'm here to talk about.
Well, what's the wrong way to do it and what are the right ways to do it?
Well, the wrong way to do it is really just going for a round of credit stacking and stopping there, not having a plan for what comes afterwards, whether that be the next round of 0% funding or again, I think both of them should be done at the same time, preparing for your second round of 0% funding and having your business become an asset, or what we call become bankable. And there's 4 legs to that I can go into more detail about.
Yeah, please do. Go ahead.
Mm-hmm. So yeah, I always joke about this. I'm like, real estate investors, they love assets. They pile up assets and they'll literally put liens on their assets to get more collateral, but they somehow fail to manage to see that their business can truly become an asset as well. We've all heard about no personal guarantee funding, and most of the noise you hear out there in the industry about no PG or no personal guarantee funding is just that noise and a bunch of BS. But if done right, again, if you build the 4 legs of becoming bankable, which is basically lender compliance would be the first step. That's very important. So seeing what the banks see in your business in terms of things, it could be little things like a mismatch of business address across your documents, or not having an actual business address. Maybe you have a PO box or something like that. Not having an actual business phone line, right? And using like your cell phone. Or we're in 2025, not having a business website or using a generic Gmail address are things that will pretty much lead to a denial in terms of getting any kind of access to real bank term financing. You could get maybe approved for a business credit card, but when we're talking about the longer term play, that's step 1 of the 4 legs is lender compliance.
All right. What's step number or leg number 2?
Yeah. So leg number 2 is basically the business credit score. So we need to, just like we have a credit score on the personal side, we need to build a business credit score. And what we're looking to do is have a 160 plus on FICO SBSS, and then a 70 plus across the other main bureaus like Dun & Bradstreet, for example. So that's leg number 2. Leg number 3 is somewhat related in that we need business financial trade lines on that business. So we're looking to have anywhere between 10 to 15 business financial trade lines. And I'm not talking about just having like net 30s and payment experiences from buying pointless toilet paper and stuff like that. I'm talking about actual financial trade lines, comparable credit, basically. If we're getting ready to ask the bank for $500 to $5 million of prime rate plus 0% interest financing, they're going to want to see that. So that's the third leg, is some kind of comparable credit that you've been able to manage that type of credit before, both on the personal and business. And then the fourth leg is basically having a good bank rating. So in our industry, we call it L5 bank rating. But essentially what that means is that just having $10,000 or more in your bank account for the last 90 days, the average daily balance. Those are
okay. So when you bring all 4 of those legs together, you're just really increasing the odds of getting that kind of credit line or that kind of credit.
Well, that's the thing. You're not increasing the odds. What you do is what happens is you become the 1%. So we've ran a scan on over 10,000 businesses. And this was like less than 20 employees, like small companies. Over 90% of them were non-bankable because of one of those 4 legs, whether it was non-compliance, whether they didn't have enough trade lines or a good enough score, or they just didn't have their financials in order. Most businesses, if you look out there, will never access this kind of capital. And they'll always have to resort to either like 0%, which is a great starter. It's what I always call a great complementary funding route, even to supplement what we talk about here with private money and hard money. This is good to cover the small costs like earnest deposits, paying for education courses, things like that. And just paying that 1% while you make that investment, and allowing you to ROI a lot more without it affecting your personal credit score. But becoming bankable, that's the big thing that we want to do, so you're not stuck with the high interest debt and balances that you have when that 0% intro rate runs out. And that's what we're finding a lot. Like a lot of people go and do that credit stacking through various different companies. Then they come to us for the second round. And there's some that we can save and kind of correct their path. And there's some that are just way too late, or there's just not enough assets or resources that we can leverage to get them out of the situation that they've put themselves in.
Right. Now, this sounds like this could take quite a while and be a long process. How fast can funding actually take when you're quarterbacking the game, if you will?
The thing is, it doesn't have to take that long when you are putting action and focus on that particular thing. So I tell people no less than 90 days, because we do have to wait for them to start reporting on the business credit bureaus. And it shouldn't take no more than 9 months. And the reason why it's such a big window is because most of this will depend on the client and how much they're dragging their feet, basically.
In other words, it can happen pretty quick if they'll just do what you tell them to do, right?
Yes, sir. And the thing is this too, like a lot of real estate investors already have a business. It's been around for years. It's cash flowing millions of dollars. All it needs is a little fine tuning. There might be vendors they're already dealing with, but maybe they're not reporting on the business credit bureaus. There's services out there like eCredible, for example. So they have a personal and business side, but for the business side, they charge $25. And anything that doesn't report like that, they can have it report on your business credit bureaus as payment experiences. So it's just a little bit of fine tuning that you have to do, especially when you already have an established business. So a 90-day plan with somebody that really wants to get in on this, turn their business into an asset. Ultimately, if you're putting up the house first, you could use the business as an asset as well if you do this right.
Right. Well, you've got a lot of experience doing this, Patrick. My question is, what's the actual difference between what you do and say what someone would get going through a traditional line or credit line?
Mhm. So somebody could say there's like a couple different scenarios. You could either do this yourself, because again, at the end of the day, these are business credit cards with 0% introductory rates. So what we do, it's kind of in the name, it's stacking capital, right? There's nothing illegal about it, but the banks definitely do not want you to know about it. And what we are doing is basically applying for multiple credit cards from multiple banks, all within a very short window. And that happens in like a few hours, honestly. I tell everyone that all of the magic happens in the prep work. So we have a couple of steps when it comes to getting the 0% funding. And the first step always starts with your personal credit. So we always have to optimize that first. I said earlier, we're looking at a 700 plus credit score, but that really just gets the conversation going. We want low utilization. So I'm going to talk right now about the minimum to kind of get in the game. We're talking about a 30% utilization overall. And this also means with each individual trade line account, revolving trade line account that you have reporting as well. So utilization is a big factor. Making sure you have a clean profile, so no negatives, charge-offs, collections. And again, real estate investors are usually big offenders where they might have a collection lingering from like years ago. And again, they just don't see their credit and their business as much like an asset. So they're kind of just letting it linger there. So it's really just about optimizing a lot of those things. Real estate investors generally have a lot of inquiries. So, we remove those during that process. And while we're talking about the credit profile, the good thing that real estate investors do have going for them is usually they have a lot of mortgage accounts, which is, again, good comparable credit. It shows that you've been able to handle large lines and pay them, right? So that is usually a good thing, especially if they have age on them. And then the second step that we go into after optimizing your credit is making sure that we're first going to analyze your banking footprint, see who you're already banking with, and leverage those relationships first. We're always going to do that. And if you're not dealing with a relationship or a private banker yet, then we have ones that we connect you with directly that already know our plan, already know what we're doing. It's all a matter of just facilitating the whole thing. Sometimes, again, some people might already have their relationship managers and you kind of have to go through them. So we coach them through basically the whole process of what to say, what not to say, and everything. And just a little tip for everybody out there too, if you are going to do this yourself and apply for a business credit card, take the time to maybe go into the branch and ask for the banking relationship manager. Again, sometimes you can avoid going through the online application. They'll give you a DocuSign. So it's actually going more through manual underwriting as opposed to the online algorithm. And a lot of times you can actually request the limit that you're wanting. Not to say that you're going to get it, But again, your chances are usually a little bit higher of higher limit approvals and approvals when you go through a relationship manager. So we look at your banking footprint and we look to fill in all the, we look at filling in the rest. I always tell everybody, with your relationships, you might be monogamous, but when it comes to your banking relationships, you definitely don't want to be monogamous. So we look at your current profile, fill in the rest, and start to establish relationships with the banks that are more suited and fitted to your business, your profile, and what you're trying to do. Because that way, whether we leverage them now for round one or not, you already, again, we're already preparing for the subsequent round of funding, 0% funding that we would go for. And then after that, it's really just the application sequence, but that takes a few hours and that's it, you know?
So you talk a lot about relationship banking. What does that really mean?
Yeah. So a lot of the times, I mean, we're talking about business credit cards right now, because again, we want to get you capital fast. That's what people are here to do at the end of the day. We want to make sure that you have a plan with that. So when it comes to applying for these 0% interest credit cards, instead of just applying online, we have relationships with bankers that, again, instead of relying on the online algorithm, they will actually look at the application. They'll look at what you filled out. They'll look at your history. They'll see your, I'm not saying you need a business plan, but again, if you present yourself well, that banking relationship manager will be on your side when the underwriter that's manually looking at it decides to give you either a low limit or deny you.
So having a actual relationship with a banker is it's like doing business with a real person instead of, trying to do this online. And I know exactly what you mean about applying online, because that comes down to the computer making the decision, and that's it. Instead of you starting a relationship with a banker, as you said, that's going to be on your side to, if there's a problem, to help push it through.
Yeah, they'll understand your business a lot better. And keep in mind, again, when you're applying online, we're going back now to a lot of the lender compliance things that we were talking about. It's not to say that for a credit card, you need a website or a number, but again, it's 2025, you're applying online and it's an algorithm. So if it doesn't like a few too many things, it might just deny you because of that and not even have anything to do with your credit score.
Right. Well, that's a really, really important tip. Now, one thing you've mentioned a couple of times is you've talked about round one of funding, round two of funding. What's that look like? What do you mean by round one and round two?
Yeah, so this could be repeated every 60 to 90 days, or you can plan it out to be around the 12-month mark when the 0% is running out. But for that, I explained kind of the 3-step process to getting funding. We have one more process after that, which is our post-funding milestone, which is where we assist people in a couple of different things. Number one, especially real estate investors, they, again, 0% capital is great for small supplementary things, whether it be earnest money, deposits, paying a title company, whatever, right? And sometimes whatever you're trying to use it for might not accept a credit card. So that turning credit into cash is what we call liquidation, like liquidating a card. But what we're trying to do is not incur the cash advance fee. We're trying to retain that 0%. So we assist them through doing that, whether it be through our third-party partner that will help you liquidate large amounts all at once, or through services like Plastique and Melio. And again, we guide you through that because common sense sometimes isn't so common. And like people will literally get $80,000 card from Chase, and the first transaction they want to run is a $70,000 credit card to wire transfer to a company that's not even, you look it up on Google and can't even find it, right? So it's like the main overarching thing of what we do here is that we try to be your best possible like resource when it comes to anything FICO and credit related, to kind of avoid little mess ups like that.
Yeah. Well, it sounds like that you have got a lot of strategies in place when you're actually working with a client to prevent them from making all kinds of mistakes. One mistake you've already pointed out that entrepreneurs make when they're applying on their own is doing it online and not actually developing that relationship with a banker, relationship banking. What are some of the other most common mistakes you see entrepreneurs making when they're applying for business credit and they're doing it on their own and they just, don't know how to navigate the process?
Yeah. So, and again, I want to answer your question too, because I didn't quite get to it, and it kind of answers this question too as well. So, we assist them with that. So again, turning credit into cash where maybe a credit card purchase is impossible. We also assist them in removing the inquiries that we racked up from the round of funding. And then the most important thing is having some kind of post-funding plan to make sure we're ready either for another round. And it just depends on how aggressive and how much they want to do. But again, sometimes we're preparing for round two, like 3 months later, and sometimes we're preparing for it 12 months later. But the process is the same. Is basically, if we're going back to the same bank, you probably don't want to have that card maxed out when you're about to ask them for more money. So it's essentially, we just go full circle. All of the steps of credit optimization, banking relationships and making sure we nurture those, and then having the actual application sequence already planned. It's basically just the full circle. Like we do that all over again. And one of the big things again is that managing that credit, planning everything right to where whenever you are going to go for that round, make sure that the balance on those business credit cards are below 40%. And again, this is where we can get super advanced, super tactical. This is where some people from other funding companies come to us, and we're able to kind of get them out creatively, because again, maybe they don't have all the liquid capital to pay down that card to again open that window for more funding. So we get creative, and sometimes it might boil down to getting either a personal loan to consolidate some of that temporarily to act as a bridge loan, and open up the window to getting more 0% funding. Because that just actually happened, is where we had a high balance on an old Chase card that was 2 years old. 0% was out. I don't remember the limit. It was like 40 or 50K. And we wanted, like, Chase was up. That was next on the list. We had already gotten funded anyways with some 0% cards. So we liquidated the 0% cards that we got, used that to pay off the card on the Chase side that was non-0%. Also used some of that money too to kind of start becoming bankable. So investing into like business credit, building business credit and all that, and maybe putting some money into your bank account to establish a bank rating. But we used, again, the money from round one to pay down that debt. So now we could, again, go to Chase, ask for another card. We got approved for around the same amount. I think it was like 50 grand. And Chase, for example, we could actually move the limits over from the old card, the one that didn't have any 0% anymore, into the new one. So effectively making that new credit card a $90,000 credit card with 0% interest for 12 months. So again, it can get pretty advanced, but the whole idea is, like, when you come to us, we try to simplify it as much as we can for you. And all that planning is really just done by us. It's to us, it's just really second nature. We see these situations all the time, and it's just sad that people kind of either get in them. There's people going through it right now. That there's people getting into this mess without even knowing right now. And we're just out here trying to be a light in all the noise, basically.
That's wonderful, Patrick. Patrick, what's the best way for people to get up with you to learn how they can get all this kind of credit for zero interest and et cetera?
Yeah. So the best thing that we have possibly done this year is we've introduced a free business scan. It literally takes 5 minutes to do, and it's going to run a scan on your business very similar to what the banks do. So the banks are going to see your lender compliance items before they even before they pay Experian, Equifax, TransUnion, anybody to pull your credit report. They're going to run a very similar scan like the one we do to see if it's even worth spending that money on that credit report. So it takes 5 minutes. And by just doing that, you'll be able to actually see the lender compliance that are out on your business. And you'll also be able to see what programs your business pre-qualifies for now as well.
Awesome. And how do they get to that?
Yeah, stackingsuccess.com. I forgot I didn't mention the link.
All right. So the URL is www.stackingsuccess.com. I love that website. Stacking, STACKING, success.com. And of course, we'll have all this in the show notes. Now, Patrick, you are a Marine. You know, they say once a Marine, always a Marine, right?
Yes, sir.
In fact, I live right here in Eastern North Carolina, near Cherry Point Naval Air Station and Camp Lejeune. If you're politically want to be politically correct, you'll say Camp Lejeune, but I think they actually moved it back to Camp Lejeune. Anyway, so we got Marines everywhere. And so here's my question. You blend military discipline with finance. My question is, how would you say your Marine Corps background shaped the way you approach funding and business strategy?
Well, there's this one saying in the Marines where it's like everywhere we went, there was something they always taught you, which was leave the place better than you found it. And that's my idea when I come across a good file. And I train everybody in my company, the culture and everything, to be like, we are advocating for that client. Like when we're on the call, even what would be a typical sales call, we call them onboarding calls. Because again, if they haven't already ran the scan, we're going to run the scan with them. And they have that whether they sign up or not, their own login, their dashboard to work on those compliance items. So I hope that answers your question. But my thing is leaving. My worst nightmare is having somebody end up in a worse situation than they were than before they met me.
Well, that's a great philosophy, and you certainly have carried over the Marine Corps philosophy as well to your business. Patrick, thank you so much for joining me. Again, that URL where you can get the free scan of your business on your pathway to getting funding is www.stackingsuccess.com. And if you're listening to this show, I highly encourage you to take up Patrick's offer for that free service. Thanks again so much, Patrick, for being with us.
Thank you. And thank you, your listeners too.
You got it. There you have it. Another amazing episode of Raising Private Money. And I need your help. You see, for me to have more of great guests such as Patrick, then I need your feedback. If you're listening on one of the podcast platforms, be sure and leave me a 5-star rating and like, share, subscribe, and follow. And a review would be fantastic. If you happen to be watching on YouTube, be sure and click that bell so you don't miss out on notifications. And I look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.